You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it is time once again for Volatility Views. It is 1 p.m. Central, 2 p.m. Eastern. Do you know where vol is? Let's find it together. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you guys like what you're hearing, make sure you leave those reviews on your platform of choice so others can continue to discover and enjoy not just this program, but the full network. Pleased to see so many new ear holes joining us week after week out there. These are troubled times, we get it, so we're happy to try to walk you through it, walk you off the ledge, inform, educate, enlighten, maybe entertain a wee bit as well. I can't speak for the Rock Lobster. I try, though. I try very hard to keep you at least in a good mood as we're doing all the shows here. And, of course, as always, keep those questions coming as well. We do love to hear from you guys. And let's see who we're hearing from on the program today. First, holding down the MIAX hot seat, he's Mr. Tom JARCK, the volatility product specialist, making a return appearance here on Volatility Views. Tom, welcome back to the program, sir.
Thanks, Mark. How you doing? Appreciate being back.
As we welcome on our other contributor here on the old program, he is the rockingest of lobsters, a.k.a. Mr. Andrew GIOVINAZZI from OptionPit.com. By way of Carmen Line Capital. Mr. G, welcome back to the program. Are you beset by ringing as well, sir?
Just the normal ringing in my ears that I have, but nothing new and untoward.
Nothing new and untoward. All right, well, let's see if we can find something new and untoward as we head on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome back to the Volatility Review, the portion of the show where we break down what the heck is going on from a vol trading and trending and analysis and unusual activity perspective and all sorts of fun going on. And a lot of fun, at least for the bulls out there, as we round out the week. Most of the major indices firmly in the green. I shouldn't say firmly, mildly in the green to end the week. The Dow is probably the firmest. They're at about half a point in the old green out there. Then we're seeing most of the other major indices feeling a little bit of a slight boost. S&P and NASDAQ pretty much tied at about up 0.2 on the day. Good old Russell 2000, a.k.a. the small caps, not feeling that love. So I shouldn't say everything is feeling the love. Small caps off nearly a full % out there today. So Russell 2000 not feeling the love the way the other major indices are feeling it out there today. Let's see what our old friend VIX Cash coming into Showtime. It's at about right around a 22.5. That puts it up slightly from last show, about a half a point. And our old friend Spikes is a little bit north of the 23 handles, about fractionally on the week, about 0.15, about 23.15 out there or so. And our old friend VVIX is almost literally unchanged at a 114 out there. That's a rare occurrence. You don't see VVIX hovering unched on the week very often. But that shows vol is moving enough to maintain these levels. A lot to parse, a lot to unpack. Let's go back around the horn. Let's start with Mr. Tom. First off, hopefully things are sounding better in his neck of the woods. Mr. Tom, can you hear me better now? A. And then B, what is lighting up your tape from a vol perspective these days, sir?
Well, definitely the usual conversation that I hear everybody having all the time is just, from the vol perspective, is everyone's talking about the elections, the election premium. We can get more into detail on that in a little bit, but overall, just seeing realized come down here into this end of August, which is kind of a seasonality thing almost, and implies are still relatively elevated as you'd expect with the all the events coming up in the fall, and there's a lot more talk now about the elections being not knowing the results day of and thinking about the Gore-Bush times when. We saw the recounts, so there's a lot of extended views on the extension of volatility into the year end.
That certainly is a hot button topic. A lot of people have that on their brain as they're looking out over the vol surface these days, which is pricing out a fair amount of vol all the way through to the elections and indeed beyond into even January, which I guess how you view that depends on how you view all these various scenarios people are talking about of late, or where we won't know the president right after the election, or maybe weeks, some say months, some say maybe even all the way through to Inauguration Day. Others say that's completely overdone, hyperbolic. So there's a lot of different ways you can slice that onion. But you're right, that discrepancy between the realized vol and the VIX has been pretty pronounced since, mid-July or so. We've really seen it kick into high gear, particularly looking at the 20-day historical out there. In places like the S versus the VIX, you're seeing a nice little juicy bit of premium out there in terms of VIX. I mean, obviously implied, usually going to have a premium to realized listeners. That's kind of the name of the game. That's what the risk premium is all about. But we've seen it unusually firm, unusually large of late, which is usually a sign that something interesting is perhaps afoot or perhaps about to come down the pike. Mr. Rock Lobster, same question for you. I know you've been watching all things term structure for a while. What has been lighting up your tape out here this past week, sir?
I mean, the only thing lighting up the tape is like just watching Apple and Tesla go up. I mean, those are lighting up the tape. I would have to say volatility is not lighting up the tape. As of right now, we have a cash down. Cash VIX down 33 cents, and I think VXX, up a dime. So we have the awesome negative decaying futures happening. And the way I've been looking at just a straight calculation is the futures are decaying almost clockwork-like to the election without any substantial fanfare. So they're just... The SEP is eroding. I think when we talked, even last week during the option block, we had almost $5 of premium in the SEP contract over cash. Now it's only about $2.70. It's still a little high relative. The October is still sky high. Trying to pick up, it's sort of pricing in November. And to be honest, I don't see any reason for that to change. I think unless something drastic happens, I think the vol will be the most boring trade for the next 2 months. You just have some future premium erosion. You might have a couple of swings in some of the vol products like VXX, UVXY. But, cash vol is going to hold to where the cash vol is going to hold to. If nobody... So I think that's what we have. I don't think it's going to change a whole lot, barring some just major move, something earth-shattering. If the polls start to swing hard one way or another, I didn't see really any adverse reaction in the VP pick as far as VIX goes. So if anything, it's down a little bit. So, again, we'll see how all of this comes out toward the election, because, we just had the Democratic convention. There wasn't a lot of sort of meat on the bone as far as policy goes. It looked a little thin to me. So didn't move VIX. And if anything, it's just kind of sitting there. So I think we have some election premium. It's going to stay there until there's a reason for it to move. And as of right now, and we could see some sell-off in tech. I guess that's possible. It hasn't happened since March, but it could happen. So I think that's what we have. Although I did have Dr. Vix. He did a run. He did a custom run just for me on request. He's an awesome guy.
Yeah, I was going to ask you about that because you had a question that you posed earlier this week on the option block, because we were in the rare circumstance, the rare scenario of VIX being in your calculation of zone 4, which is lurking around or north of that 24 level, which we're a little bit shy of right now, but threatening it earlier this week, and also the S threatening an all-time high. And I believe you had the question of, have we ever really seen that before? Usually VIX at an all-time high, or I should say SPX at an all-time high, usually equates to a pretty sleepy, a pretty low VIX. And you reached out to the once in the future, not quite Dr. VIX yet. He hasn't gotten that PhD yet, but the once in the future Dr. VIX, a.k.a. Mr. Rhodes. What did he have to say, sir?
Oh, that he said the last time was 98, the 98 to 2000 period were most of the samples for like relatively high VIX, like zone 4-ish, and SPX at all-time highs at the time. So that was that was kind of what I thought the last sample would be, so it didn't surprise me too much. But he had the data, so that's why he's not Dr. Vix yet, but heck, I'm just going to give him the title anyway.
Yes, he is the once and future Dr. Vix. I owe him a plug for his book. I need to get on that. But let's keep on rolling on here into the futures neck of the woods. Obviously, Spike's futures still halted. We talked with Shelley recently, Tom, on the show about any updates on that front. Are you hearing any whispers in the wind, sir? Can you give our audience any hopeful glimpses into the future on when we might expect something coming down the pike on the Spike's futures front, sir?
Yeah, I would say, very likely, but don't have anything definitive at this point. It's still a little bit more of the same, and that's I'd imagine, this week and next, well, this week is over, but next week and the week after, things might be a little quiet as far as the, a lot of the commission is probably taking their vacation, their breaks. So, hopefully in the near future, but nothing official to announce at this point. Continue to work on, materials, talking to people. There's definitely some excitement about it. A lot of excitement actually. And, we've seen some other competitors, if you will, introducing new products as well. So it's, the whole, I feel like the volatility product market is picking up again, and hopefully we'll see a lot more, entrants and a lot more, participants, I should say, in the space.
Yeah, I think we have a listener question about that, so we'll get to that a little bit later in the show. But you're right, that does kind of raise the question of that product getting approval. Should hopefully maybe pave the way or at least grease the wheels a little bit to getting spikes back on the listed track. In the meantime, let's look on out to the listed VIX futures. Tom and the Rock Lobster both talking about this. This has kind of been the go-to talking point in the volatility space for the last few weeks. And if you listen to this show, it's been the better part of this year, ever since even before the pandemic hit. Way back in January, we were commenting on, man, this election premium seems pretty rich. Little did we know what we had in store for us between January and the election. The election is kind of just a blip compared to all that fun. But looking at what they're pricing in out there now, as the Rock Lobster alluded to, as he kind of said, I have to give him credit. I give him a lot of umbrage all the time, but he did make this comment earlier in the week on the option block that he thought the SEP future looked like an opportunity for some shorting of vol, and that has come in, as he said, pretty aggressively this week. That SEP future coming into Showtime was around 3.5 points premium to the cash. That puts it about 1.5 handles lower than this time last week. So well done there, Mr. Rock Lobster. The AUK future is at about a 7-point premium to cash. That's still hefty, still juicy, but it's about a point lower than it was last week. It was about 8 points last week. So we're seeing across that term structure coming in a little bit. The no future at about a little north of 6, about 6.3 points distant from the cash. That puts it about half a handle lower. Then we go out to Jan, which is still pricing in a hefty amount of vol, 5.7 point premium or so to the cash, but that's still lower. That's not quite a full point, but pretty close. A little bit north of 3/4 of a point lower than it was last week. So Mr. Rock Lobster, you kind of touched on this earlier. You said the futures are decaying with little fanfare. I guess unless they don't listen to this show, then they're hearing about it. But walk us through what you saw here in the term structure this week, and how are you playing that SEP short? Were you just going straight on the puts in the SEP cycle? Were you doing some time spreads? What was your go-to methodology? Because I know you were really trying to zero in on that SEP future.
I had some, so as far as SEP goes, I just had straight in the money strangles, like long in the money puts in VIX and long the calls. So it was like 27-ish. The strike was actually 27-ish, 27 strike. And then I kind of had a smorgasbord of calls, depending on the days that I bought them. When we had a pretty good downdraft, I got rid of some of the puts, and I'm just kind of holding on to the balance of the position. I also have some out of the money SEP, which is not looking great. It was more predicated on the fact that we could get to a 20 cash by September because the realized vol was so low, and there just might be some what I'll just call just kind of the weight, just kind of pulling vol down a little bit, getting maybe to a September close because the SEP is still picking up an October volatility, which is still, it's touchy election-wise, but it's a long time. So as far as premium goes, I had VIX, VXX, so like those products were decaying like about $1.25 per week, sort of in line with how the future's decaying at this point, just because how the numbers set up. So I think those are the big things. And until more dominoes fall, election-wise, I mean, when people come out there and start selling the 3,000 put again in the SPX, that's when VIX will go down. I just haven't really seen it. And if you look at vol, so another way to think about, cash VIX and premium level is, hey, what's the straddle trading for in the SPX? So I think one of the easy ways for listeners to go is, what's 1 month expectation, right? Because 1 month is essentially spikes in VIX. That's the 30-day number. So if you're going out to, let's say, we'll call it the 21st of September, they're pricing about $120 straddle, give or take. Maybe a little more, maybe close to 130. Which is, it gets us to, I think that's a decent range, right? What is that, 4 or 5%? And I think that's kind of how they're going to price it until somebody sells something. So, you kind of carry that vol out to November where they're going to price it a little higher. And that's just the way the vol works out. I mean, a lot of spikes, and it's all just math, where VIX is, where SPX vol is, how it reads the strip of volatility. And you could have a lot of action. I mean, there's crazy vol in some of the Q stocks right now. So it's hard for VIX cash to go lower, even with realized vol in the single digits in SPX. So I think it's more of it is a sort of what I would call a melting vol market. It's not quite a shock vol market, at least right now. And, you could buy all the UVXY and VXX you want, but those products are, they are buying massively expensive futures. So you need big action for those things to pay. Doesn't mean it can't happen, but that's what you need to make it pay, because you need to move. It's like trying to walk around with 100 bricks in a backpack right now. So we'll see what happens. We'll see how things can liven up a little bit, but it just looks like all the money is going to the names that are splitting in the NASDAQ. What I'm surprised is we haven't seen Google, Facebook, and Microsoft announce a split, because it's run the other stocks like 25 or 30% in 2 weeks. So, if it's good for the goose, it's good for the gander on the stock splits. It kind of reminds me of the giddy 90s, but hey, Amazon split, and then 6 months later, split again. So it's like it's not the first time this game has been played.
Yeah, we are hearing rumors from the folks who crunch these numbers that they are getting inquiries, some of the other big companies out there who are not ignorant of the boost that they've seen from Tesla and Apple. And what's Tesla, like something ridiculous, like 40% since they announced it. Outside of any other real catalyst to drive that move, it's kind of purely just split driven, which is borderline insane. But you can say that for a lot of things that go on in Tesla stock. Even I think even Musk these days is saying the stock's a wee bit overbought. 2,000 level for Tesla. Yeah, it's hard to ignore that. If you're some of these other companies out there, maybe they have had a good run. It's hard to argue they need more. But hey, if they want to boost themselves, anywhere from 10 to maybe 40%, go out there, follow their lead, announce some splits. Maybe we need some vol splits. What do you think? Vol splits, reverse splits. Get back up there. Get some juice flowing out there. Tom, what are your thoughts here on what we're seeing out here? I know the VIX futures term structure has kind of been the big talking point of late. We haven't had you on in a little while. So, what are your thoughts on A, how rich that premium got around the election, and B, kind of what we're seeing right now, a little bit of that erosion, and also C, how far out they're pricing this vol past the election. Are you on board with that? You think that's a slam dunk fade trade, sir?
I don't know if that's a slam dunk fade trade, but I think the probability of some more of a delayed announcement of an official president at this point in the game is pretty likely. So I think pricing out more volatility post elections makes more sense. I have heard of people actually taking advantage of that November 4th premium and actually selling that to buy, some further out of the outdated options to play that move. In general though, it's it's kind of a wait and see thing, and as things get more, as we get closer, if we know more. But then again, the polls of the last election didn't really mean much, so it's it's really a wait and see game at this point. I think everyone's cautious, and just there's a valid reason for the vol to be bid up out there. One of the things I did want to highlight that I didn't mention before was we're talking about the stock splits and some of these names that have been ripping pretty good since those announcements. There has been some, from what I hear and see, some the classic stock replacement strategies in the tech space and some of these, I guess the retail tech, if you will, but where, investors will buy call options and substitute, as a substitute for their holdings, get rid of their holdings and hold on to some call options. And we have seen, some of that come through, even the index vols are somewhat stable. We have seen implied correlation come off quite a bit too. It's, I'm just looking at like a 3-month here. It's around like a 40 versus, during the debacle, it was up to, almost 100. And pre-March, normal levels were around a 30. So that has come back down quite a bit, mostly in my view, from the demand on the single names versus the, slight drifting lower in the index side.
Yeah, stock substitution, it's hard to argue with that, with that one when these stocks are as lofty, as elevated as many of them are right now. Let's head on out to the volatility options side of the fence. Like I said before, Spike's options kind of waiting for those futures to come roaring back to life. Oh, before we move on from the spikes options really quickly, last week, Tom Shelley hinted at the forthcoming, I know we wanted to call it Viking, but the V-spikes out there. Any updates on a date for that, sir?
No updates on a date. Yeah, it's just it's something in the works. We want to make sure all the ducks are in a row before it's published on a live environment. But it's coming soon. It's actually a pretty unique version of that. So it'll be exciting to talk about. I'm sure we'll probably have Simon join the show at some point to discuss that product.
Yeah, I know Mr. Rock Lobster, your counterpart there, Mr. Meatball, was very sad that they didn't go with his proposed Viking branding for that one. That's, of course, listeners, the volatility of spikes itself. So the V spikes. Looking forward to having that so we can crunch some more numbers and analyze some more data here on the show. Speaking of analyzing the data, not a lot to analyze today from an overall VIX options perspective. Pretty light, but it's overall pretty light time out there in the volatility space right now. We're seeing about 187,000 contracts on the tape as of a few minutes ago. The ADV is back below 300K, listeners, ticked just below it, 299. That puts it down another 20,000 contracts from this time last week. When we're getting this low, another 20K, that's a lot. So not a lot lighting it up out there in the vol space. You see that reflected also in the top positions out there in VIX land right now. It's once again back down to anemic OI levels, right around 4.4 million contracts. Looks like about 2.6 million or so in the calls and about 1.8 million in the puts. It only cost you, get ready for this, listeners, it only cost you 65,000 contracts to break into the top 10 in VIX. That usually isn't enough to even sniff at the top 20, and yet that gets you all the way to number 10. That gets you to the SEP 50 calls with 65,000 contracts. Number 9 here, 67, almost 68,000 of the SEP 45 calls. Number 8, 72, almost 73K of the SEP 55 calls, a.k.a. the doubles. So a little bit of upside juice there, padding out the bottom of the top 10. Number 7, this is some upside, 73,000 of the November par calls. Talked about these last week. That's an interesting strike out there. Also saw even higher strikes going up last week. Number 6, 78K, almost exactly, of the November 65 calls. Number 5, 83,000 of the SEP 21 puts. So you got to go all the way up to number 5 to find the first put on the list. That's kind of interesting, particularly given where we are and how much the Rock Lobster and others have been talking about fading these elevated futures out here. 83K for the SEP 21 puts. Number 4, 93,000 of the SEP 24 puts. Number 3, 98,000 of the SEP 60 calls. Numero dos October, our first and only October on the list, 25 puts, 100K, almost even. And number 1 is 149,000 of the SEP 20 puts. Usually that's barely enough to break into the top 10, listeners. And yet that's enough for number 1 right now. On the tapes today, like we said, it's kind of a quiet time out here in the vol landscape. So only 187,000 contracts on the tape. There is one contract that's pretty active, and it might be a surprising one, though, today. 65,000 of the Jan 40 calls have traded today, followed by 50,000 of the Jan 27 calls. So maybe a bit of a weird vertical lighting it up out there on a ratio. Either way, interesting strikes, interesting months as well. Maybe someone getting back out to that tip that maybe we won't know what the heck's going on with the White House all the way through to Inauguration Day. Let's go out to Thursday, a little bit more active out there, 322,000 contracts on the tape. The big, most active contracts that day, SEP 20 puts with about 42,000, and then you drop quite a bit down to about 18,000 of the SEP 21 puts and 15,000 of the SEP 70 calls, 70. That's an interesting strike as well. So we're getting some interesting bifurcated paper here, listeners. You're getting the put fading that we expect, but also some other interesting strikes and indeed verticals are flirting their way into the list here. And Wednesday, a little bit more active out there as well. Not quite 500,000, but pretty close to it. 478,000 contracts, the most active contract that day. The SEP 37 halves with about 47,000 contracts, followed by the SEP 60 with about 39, almost 40,000 contracts. Also, 32K of the SEP 21 puts and the SEP 45 calls up there for about 30,000 contracts as well. Tuesday, the busiest day of the week, 637,000 contracts on the tape. That's pretty aggressive paper. That's pretty much over 2x the ADV right now. So that's a pretty hot day for this time of year. with the big, most active contract that day, 57, almost 58K of the SEP 20 puts. So once again, that strike in the lead, in the vanguard there. Number 2, the SEP 24 puts, 32,500, and the August 23 puts with about 28,000. Then Monday, bringing up the rear there, about 347,000 contracts, so a wee bit north of the ADV. 31, almost 32,000 of the AUG 24 puts made it the most active contract on the day, followed by about 30,000 of the AUG 20 puts and about 21 and change of the AUG 27 puts out there. Mr. Rock Lobster, it's an interesting, kind of sleepy week. You said at the top of the show you think the vol trade may be a little bit sleepy for a while. Any of these prints catching your eye, including maybe this funky? I'll have to dig in and see what this Jan trade is today. But anything catching your eye out here in VIX options this week, sir?
I did see some just overall, just some puts trading. I thought, where things might be a little, come back into play a little more. But the only other thing I saw was there was I think when you're saying Jan, I think I saw the Jan. I think there was a 75, 125 call spread. Was that the one you were talking about? That went up for there's pretty good size in VIX on that. I think Tubby told me after that went up.
Oh, that was the one from last week. I'm looking at the one from, there's some Jan calls trading today. I have to go dig in and see if I can find it. The 27th.
Yeah, there's 50,000 Jan calls. It's not going to surprise me that people are buying that stuff, by the way, because the contested election and all that, as I recall from 2000, eventually it gets worked out. It might take a couple of months, but I think the hardest part with that as a trade is the market cap was in limbo. It just doesn't go anywhere. Everybody's like, oh, yeah, no. It's like every news snip was sort of, oh, it's them. No, it's not. It's just it all became kind of farcical at the end. But I think, for a brief moment in time, sure, the ball could pop. But I think those trades are going to be a little harder to make dough on. But like I said, market at all-time high. Everybody's just waiting for the next crash. So, and anything can happen.
Yeah, I'm looking here. That did go up. Looks like it went up a bunch of different times, 15,000, 10,000 of that spread. But it seems like it did go. And sometimes it went up in weird late prints here. But there were some of them went up marked spread, even though they were all pretty much late. And they were also done legged floor and opening if you need a bunch of trade tags alongside that. So it does seem like that is a vertical. Seems like paper probably the sane heads would have you say it's buying. It looks like they are. Looks like one of those prints went up about 15,000 versus 15,500 right around the same time. And it does seem like they were buying the Jan 27s there. So an interesting vertical. Again, it's hard to fault them for that. I don't know, maybe if January is the time you want to be buying that vol. Maybe you want to get it a little bit closer to the dance there. But on the flip side, those futures are already elevated. Jan's elevated, but not quite as elevated as we're seeing around the election time frame. So maybe that makes a little bit more sense. Let's move on out to some other vol products here before we get to some other fun topics here on the show. VXX, a.k.a. the product a lot of your crazies like to fade over there in the pit chat. Mr. Rock Lobster coming into the show today. It was a tick shy of the 25 handle, about 24.90 or so. That puts it down almost 3/4 of a point from last show, which is pretty much almost the exact same amount it was down the week before. So it's been eroding at about 3/4 of a point steadily for the last couple of weeks. Come into Showtime today, we saw right around 100,000 contracts on the tape. That's decent paper, about half the ADV, which is 201,000, which is pretty much exactly unched from where it was this time last week. And the most active contracts coming in today, we saw the AUG 25 puts with about 7,500 contracts on the tape, followed by the AUG 25 calls. So maybe a little bit of a funky straddle out there with about 5,200 on the tape out there as well. The hot positions, what people are trading out there, what they have open for size in VXX right now. Let's jump up to the top 5 because the top 10. By the way, if the meatball were here, if we were playing Where's Caldo this week, it would be number 6 for the SEP 30 calls. That's the first call on the list. But let's break down the top 5. 29,200 of the AUG 35 calls, followed by number 4, 32,000 of the SEP 23 puts. Then we go back to 57K for number 3, the AUG 30 calls. And then our friend still has his put spread on for a pretty decent size. Feels like he might have taken some of it off a wee little bit. But there's still size open on these strikes, listeners. There's the AUG 2230 put spread. We talked about it a while ago. It's about almost 82,000 open on the AUG 22 puts and 90,000 open on the AUG 30 puts. That could be just other paper has flocked into those strikes and has now come off as well. Total of about nearly 2 million contracts open out there with a little bit of a lead to the put side, a little bit north of like 1.02 million puts open versus about 900,000 and change on the call side. Mr. Rocklops, you mentioned it earlier. Products like VXX, they have to play in that pretty juicy futures market right now. So they need some pop. They need some whiz-bang to pay for that. What are your crazies up to in the product they all love to fade this week, sir?
I'm actually pretty light in VXX. I have almost nothing. I've been just buying kind of in the money put strangles, on to 2 weekly basis, to expire in 2 weeks. Just trying to either decays out, we make a little money, or the vol blows up. That's kind of where I am with it. But I'm not allocating a whole lot to VXX because I don't think it has a whole lot of chance to move. So normally it's a product I love to have something in, but right now, like I said, it's just kind of a, sort of a sleepy thing, and I don't really feel like selling any premium in it right now, just because I still feel this thing is kind of tinderboxy, so it's not a trade I have an interest in. If anything, you could probably sell puts that are, $1 or $2 out of the money in there, and just try to scrape some premium that way in there. But like he just said, it's decaying around 75 cents a week. And besides that, I don't see a whole lot of other interesting trade going on in there.
Nope, getting your $0.75, put it in your pipe and smoke it on there. Before we go out to some other products and the single name vol landscape, the vol landscape itself had a little bit of an interesting shake-up this week. Tom, you guys were at the forefront of that yet again. I was talking with Shelly recently about your guys and your foray into the crypto side of the space, but you guys didn't stop there. Now you guys have added MJEX to the stable of the MIAX group there. Why don't you walk our listeners through what you guys are up to there and why you decided to bring MJEX into the fold, sir?
So I'll leave that to Shelly and the more senior folks to get into the details of that. But in general, it looks like a good partnership, and they, when the futures do become Spikes futures. Spikes futures become launched, they will, trade off MJEX, and they will clear MJEX, and they will, trade through the, MJEX's world via the CME Globex platform. But the, that's down the road when we get the official launch. But I think it's just exciting, and I felt like everybody was ignoring my phone calls and stuff like that, but they've been pretty busy over there at the MIAX, management per se. So I think, it sounds from what I gather, what I read is that it's going to be, status quo as far as what the business they're running there, but it opens up some opportunities for, the MIAX exchange group to do some new things. I think that the closing is scheduled for sometime next year. So that's, there's still some time to go on that. And then at the same time, on Friday, there was an announcement that there was the official SEC approval of the MIAX Pearl Equities Exchange. So we are, MIAX is in the futures exchange business and the equities as well in the same day. So it's kind of a unique day.
I know, Tom. Didn't anybody tell you guys over there this is a lockdown? There's a shutdown right now. I'm not supposed to be out there doing stuff, Tom. And you guys are supposed to be sitting on your hands, not out there adding to the stable of companies out there. But yeah, it makes sense on the MJEX front. Of course, listeners, that's where the Spikes futures were listed. So when those futures come back, it makes sense to have that futures exchange in the fold, as it were, out there. So a lot of interesting things popping off on the equity front, on the crypto front, on the vol, soon to be, I should say, vol futures front. So a lot of interesting things to parse out here as well. Let's see if there's anything interesting to parse in another product you guys are starting to become a little bit more acclimated to. That's our old friend, UVXY. I know your buddy out there, Andrew, Mr. Lincoln, loves himself a little bit of UVXY. Seems like more of you do because the ADV is ticking up. It's up about 20,000 contracts from last week. It's up to about 83,000 contracts right now, which is a decent jump for this relatively sleepy name. Usually they come into Showtime was at about a 20.25, puts it down about a point from where it was this time last show. We saw about 55,000 contracts on the tape. Coming into Showtime, the big prints were the Jan 11 puts with a whopping, brace yourselves listeners, a whopping 4,115 on the tape. So not huge paper yet, but it's starting to get there. The top positions out there in UVXY are number 2, the AUG 18 puts with about almost 11,000 and nearly 12,000 of the Jan 10 puts for number 1. Total of about 510,000 contracts open. So it's like it's growing slowly but surely out there in UVXY. Again, it's not my favorite. Ever since they neutered those products, I'm not exactly huge fans of them. And I've been a little reticent to really put size back on in them since they effectively altered the contract mid-cycle. But that little bit of anger aside, if you were in the TVIX camp, you kind of miss a lot of that stuff, then, UVXY, kind of one of the last of the Mohegans, and hey, it's optionable. So it's got that arrow in its quiver out there. Moving on out to single names, a lot of earnings vol has been on the radar. A lot of it, unfortunately, for the premium buyers, has been on the blood red side out here. We saw some big names popping off this week. We've got some reports for you over there, theoptionsinsider.com, courtesy of our friends over there in Orat's land. I'll just break down a few for you here. Alibaba, they were on the 20th before the bell. As of this report, they went to their earnings, I should say, 260 and about a half. They were pricing in about 4.7%. They delivered about 1.8%. So once again, premium buyers not looking good, getting the short end of the stick there. NVIDIA, they were on the 19th after the bell. They went into their earnings 485 and a half. They were pricing in 6.2% on the vol surface there, and they ended up moving 1.5%. NVIDIA is always a pretty reliable bet to deliver a little bit of a whiz-bang around earnings, and yet even NVIDIA kind of whimpering. As Matt even said recently on the network, it's been a very bloody season for premium buyers out there. We got some other ones popping off next week and give you a little bit of a preview here. We got Best Buy here on the 25th. They were at about 112. As of this report, they were pricing in $8.12. In the past, they moved $7.41. So a little bit rich in Best Buy land. We'll have to wait and see if that's warranted. If past is prologue this season, then spoiler alert, it's not. Don't buy that thing. Intuit, same deal, 310 and a half. As of this report, they're popping off on the 25th. They were pricing in, get this, $14.63, listeners. And in the past, they've moved a whopping $8.39. So it could be this is the one name that bucks the trend out here. But again, as the previous names have showed us, this is a difficult time to be a vol buyer during earnings season. Dick's Sporting Goods, they were at 46 and a half. As of this report, they're popping off on the 26th before the bell. They were pricing in, they're pricing in $3.36. In the past, they moved about $4. So a little bit light. I guess hard to argue that's not merited. Dell at about almost $60. They were pricing in $4. In the past, they moved $1.70. So quite rich on the Dell front. Hewlett-Packard, they were 18 and change. They were pricing in $1.25, and they've moved $1 in the past. So a little bit of juice out there as well. If you want the season report, that's all available for you as well. TheOptionsInsider.com. It's a sea of red. I'm looking at it right now, listeners. So yet again, another season where vol buying in the pandemic without much guidance has really been just a miserable course of action. Let's see if your questions, hopefully they're better than miserable, as we head on into your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, let's kick it off with some love, as we like to do these days. There's enough consternation and anxiety and hand-wringing in the air. Just turn on the channel or open up pretty much any web browser, and you're filled with it. So let's start it off on a positive note here. Let's go back. This is an App Store review from TR Beer 78 for our network app. Remember, listeners, you can get our stuff available on all the major app stores as well. We have our app. It's one of the best places to get all of our shows aggregated in one place. You can make playlists, do a lot of cool stuff. It's got a auto mode for the car and everything else like that. So if you're having trouble on whatever platform you're on, you want to go back deep into the archives of one of our shows, the app's a great place to do it. And that's what TR Beer 78 says as well. The subject of his review is it's all in one place. He says it's nice to have the entire library of shows all in one place. Well, that's why we did it there, TR Beer 78. So you guys have even easier way to access our content. It's even available on the Kindle Fire app store there, listeners. So no shortage of ways for you guys to get our content. Let's really quickly run down what you guys thought last week. We asked you last week on the show a poll of your views on end-of-year vol. You think VIX and spikes are going to close around where they were here, 18 to 25, higher, 25 to 35, lower, south of 18, or much higher, north of 35, and 25 to 35 won it with about 32% of the vote. Then number 2 is much higher, 35%. So we're talking about 55% saying it's going to be north of 25 by the end of the year. Maybe that's the guy who's buying that vertical in Jan there. And then we've got a tie for third with 22.2% for 18 to 25 and lower than 18. So I guess if you look at it, you want to be a glass half full, glass half empty, maybe glass in the middle view. It's close to 50-50 for north of 25 or below 25, really, because that's 18 to 25. So our audience may be a little bit bifurcated out there. All right, let's see what else we got going on here. We had Pat Carroll on the show last week. He commented on, even though we have a steep contango in the futures, he wanted people to remember that the absolute level of VIX futures is still quite high. And we had Beaver Creek Tom chiming in during the show. We just didn't have a chance to get to it, saying COVID and the election year, he thinks vol is going to stay high in 2020. Well, it seems like the futures, at least for now, agree with you, even though they are coming in a little bit. Andrew, you were talking about your buddy Volman here. And I think this was today. And the aforementioned Jim Carroll chiming in again. He says VIX is boring for now. It's kind of in line with what you're saying as well here, Andrew. You think the vol trade is going to be a little bit sleepy for a while, Andrew?
I do. And I like Jim Carroll's stuff. So he's a good tweeter. Somebody, if you don't think the stick man is enough for you, there's always Mr. Carroll. He's a pretty good follow for vol. So, yeah, I agree. I mean, it's hard to get away with the weight on the future weight. That's it. Of course, I will be looking forward to a competing product soon. But for right now, that it is hard to get around that weight because it's just hard to move that future because the vol's already built in. So don't forget everybody else. Like, the market is looking for pretty good moves already, and the futures are, a forward vol layer on top of that, kind of relative. So, it's expensive stuff already. Like I said, you're walking around with 100 bricks right now. So we need something pretty earth shattering to move cash VIX right now, at least the way I think about it.
Your crickets are just cracking me up. They're putting me to sleep here. They sound like vol is certainly putting them to sleep over there, the GIOVINAZZI crickets. Speaking of competing products, Tom, you alluded to this earlier in the show as well. We got a questioner from Bills, BLLS. He wants to know, NASDAQ and CME, we talked about this last week on the show. They're launching what was formerly the VOLDEX/SKUDEX has now been rebranded the VOLQ, which is, of course, the vol, effectively VIX and spikes without the SKU component on the NASDAQ index. So a little bit of a different beast there. He wants to know, why does NASDAQ need CME Group to launch their vol product for them? Don't they have a futures exchange? Can't they launch it directly without the middleman? Tom, this is an interesting one. You talked about it earlier. I'd be curious to get your thoughts, you mentioned it. Do you think this product getting approved may pave the way, kind of grease the wheels a little bit for those spikes futures finally coming back to listing? And then B, you guys have experience with this. You guys just bought MJEX. If you have any thoughts to share on the thought process as to why they would need CME and why you guys use MJEX, you want to share with Bills and our audience here, Tom, have at it.
Yeah, my view is on why NASDAQ would partner with CMEs. CME has access to, the world in futures. It's, pronounced exchange in the futures business. So I think, partnering them with this is a good idea. I didn't think from my, readings in the past and stuff like that the CME would, jump into vol products, but I guess that partnership makes sense. And from the product itself, my hope is always that, if someone has a new product out there that's related, that it'll introduce some more spreading of trades and, volume gets more volume type of thing. I'm not completely averse to it. It is a different calculation, as you mentioned. This one uses, I think, like 8 at-the-money options across 4 different maturities. It's much more like the original VIX calculation that used to be on the OEX back in the day. Will it help the relisting of Spike's futures? I don't know. We've been in. If anything, I feel like the Spike's futures process may help this one a little bit. Hopefully, the more products, the better if people can trade one against the other and things like that. So it's, hopefully we both benefit, both exchanges benefit from it.
Yeah, I've always been of that viewpoint that, more products benefits obviously the end user, but also it benefits the ecosystem. Look at VIX. VIX didn't really become a big thing until the ETPs and that universe really exploded and started feeding back into it. So the more products out there that can arb and trade against each other, the better. And I also feel good for Scott Nations to finally see his product see the light of day. He was telling us, I think he was on this network talking about it over 5 years ago in the original Voldex and SKUDEX format. It got kind of caught up with the ISC and then with the NASDAQ acquisition. It had a lot of different permutations. I know the NASDAQ folks came to me a couple of years ago and VIX was having all those legal issues and they were really excited to get that product out to market. And that was a couple of years ago. So it's obviously approvals in the vol space, as you guys can speak to, Tom, are a challenging thing post February of 2018. But still, it's interesting to see more products out there, and hopefully this will feed into the ecosystem. And at the end of the day, a rising tide will hopefully lift all boats. We got one more for you here, Tom. This is right up your alley as well. This comes from Elson. Elson wants to know, is the OTC vol market bigger than the listed vol market? Great network. Well, thank you, Elson. And this is an interesting question. I guess it kind of really depends how you slice the apple there, how you define the vol market in quotes. Because obviously there's the listed vol products. There's the VIXs and the spikes and the futures and all the other things around them. But of course, you can't really talk listed vol without SPX, which is the mothership. Are you including that in that conversation? It's kind of hard to remove it, but it's not technically a listed vol product, even though it is effectively a volatility product as well. So interesting. Maybe we'll parse it a couple of different ways. Tom, if you have any thoughts for Elson here, used to trade a lot of OTC vol back in the day. On the comparative sizes of the two markets, sir, have at it.
Well, for the first part, there's different ways to compare it. One is, do you compare it on notional volumes? Do you compare it on contract volumes? Do you compare it on Vega notional? Because from a Vega perspective, there are a lot more longer dated OTC options that trade. So you might, that would probably bring up the percentage of OTC trades relative to listed because the longer dated options have typically more Vega. The listed space is definitely, much more, there's much more magnitude. But I'll also say in the OTC world, to your point, like, do you include, variance swaps? Do you include, all kinds of like structured products that include index vol embedded in them? So it gets a little, actually somebody recently asked me that same question. I was like, well, it's kind of hard. It gets a little murky. But one of the things, like, a lot of the pensions, insurance companies, those guys will do, they do a lot of OTC trades, because a lot of their structures are a little more, I guess, frequent and a little more complex and a little more, almost like a basket of options where they come in, they'll quote 50 different options, all tiny size, but it trades as like a portfolio like that. Other trades, some things that are done OTC a lot, or, a big pension, or somebody might do a collar trade and hedge off a big position. The reason why there's different reasons why they do it OTC, but a big part is not exposing the dealer to the delta risk, which is a big concern. So if you're giving a price to a client, the last thing, it gets very challenging sometimes when you bring those big trades down to the marketplace, because it's just kind of showing your hand in a way. But eventually, those trades, the dealers will hedge those out in the listed market as well. I guess it's it's bigger probably than most think, but not that much of a big percentage of the listed volumes.
Well said, Sir Andrew. If you want to add anything on that, VIX, or I should say OTC versus listed vol, have at it. And also, we're running up against it, but I'm always a charitable fellow. We got a question in the live chat. I always like to make sure we bump them up as well. Jeremy Schaller wants to know, he says, so I've got calls through September 1st. Do I hold until next Friday or just dump now? I figure hype for the event keeps... I'm assuming he means VIX calls, Andrew. He doesn't say what he's got calls on or what the strikes are or anything like that. So if you have anything you want to add in for Jeremy here as well, have at it, Mr. Rock Lobster. Good luck.
Like I try to tell my students, it's really helpful if you have a question about something, you actually ask exactly what
tell
the
us
question
what the heck you're talking about. Yes.
So, yeah, if you have September options for VIX, I think you're kind of pushing up a rope. That's me. I would not hold a call in VIX without an in the money put against it. Actually, those are my positions. So, and I'll let the market prove me wrong as far as the early delta goes. So, as far as the big notional, I'm sure I can't even imagine how big the over-the-counter notional vol is. Just ask long-term capital. I mean, remember 1997? That was 20-something years ago, and it was kind of big enough to get everybody freaked out. So I have to imagine it's fairly large.
Long-term capital. That was kind of my entry point to the derivatives game. I was just cutting my teeth as a young clerk back when all that fun stuff was breaking onto the scene. Meanwhile, it's time for more fun stuff on the show. Some might say it's the most difficult. Some might say the most dangerous portion of the program. Yep, it's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Coming into the final portion of the show here. This is, of course, where we attempt to wrestle with that slippery pig known as volatility for the coming week. We had a cavalcade of vol stars on the show last week, and their guesses were all over the place. Coming into the end of the show here, we're seeing spikes at about a 22.70 or so. It looks like VIX giving up more of the ghost, down to about 22 and a quarter. So that puts me, actually, in the driver's seat with about a little bit more than 2 points on VIX cash, and spikes I'm about 1 3/4, almost about 1 2/3 points or so. I was at a 24.35 out there, which is still not within our 1 point margin of victory, listeners, so I cannot claim victory. But that was the rare time where I was actually the lowest on the totem pole, and go figure that actually worked out. Even though it was higher, I was picking a little bit more vol than we had last week. Then next was Mike, one half of the Thompson twins. He was at 25 1/4. Then we had Matt, the other half of the Thompson twins, at 27.35. And then we had Jim Carroll picking up the upside there at a 29 with an exclamation point. He was emphatic on that. So not feeling that upside here this week. So my lowest of the upside totem pole, it wins in air quotes, but it's not an actual win because I'm not within a point. So I will not accept it. I'm not that guy. I win or nothing here, listener. So that means I'll at least get to pick who goes first. And Tom, you haven't been on in a little while, so I will give you the somewhat dubious honor of going first, sir. What are you feeling this time next week for spikes and or VIX, sir?
Yeah, I feel a little bit more of the same, so I'm probably going to go on the lower end here, like a 20. Let's go to 21.5.
21.5. Interesting. Mr. Rock Lobster, I extend the next courtesy to you. I have a feeling I know where you're going, given all your talk about not wanting to buy a call unless you have in the money put against it. I got a feeling I know where you're talking, but where are you going to hang your hat this week, sir?
You know what my favorite part of this show is how you have the guest that goes first, how you sweet talk them, only so you can scum him if you need to. That's really my favorite part of the show.
I was the closest this week, so that is my prerogative.
Bit out there, and you're like, okay, I'll run in front of him by a dime. I know that's what you do. I know that's what you do.
Don't reveal my plans to the masses, sir.
But I don't want to have to say that loud on air or anything like that. But it's just a guess, an old pit trader's intuition, let's say. So I would say, yeah, I did not expect a lot to happen out of VIX, and I didn't think 21.5 was too bad. Oh, wow. I'm actually going to go south. I'm going to take south small. I'm going to say 21-25.
21-12. So look, after giving me a hard time, Tom, he squeezes you on the bottom by a quarter of a point. So I talked all that smack about me, and then he comes in and just scumbags you by a quarter of a point. I'm not going to do that. I'm going to be the charitable fellow. I'm going to be the nice host here. And, I've been feeling for a while, worked out this week, but even though worked out in quotes, because, again, it wasn't within our margin of victory. But, I see the argument for fading, and certainly you can see where the futures are, and maybe there's an argument they need to fade a little bit. But I'm going to say we're going to end up net not a heck of a lot different this time next week than we are right now. I'm going to say 22 and about a quarter. So that puts us down roughly or half a point or so, pretty close to it on the spikes, and actually unched on the VIX this time next week. So we got a pretty tight market this week, listeners. You got me on the upside, 22 and a quarter. You got Tom playing the Goldilocks in the middle there at 21 and a half, and Andrew scumbagging him to the downside at 21 and a quarter. Do you have a vote? Want to share with your fellow listeners what you think VIX and spikes are going to be doing next week? Hit us up. We'll put them in the show for next week. Unfortunately, that music means we've come to the end of another epic sojourn through the world of volatility. An epic one it was, listeners. We talk spikes, we talk VIX, we talk the options, we talk the futures, talk little VXX and UVXY, talk some single names out there lighting it up, or perhaps not so much. Remember, you can get those reports for yourselves, theoptionsinsider.com. Can't beat the price. It's all free. Answered a bunch of your questions about OTC, vol, new players in the space, a whole bunch of fun stuff. Hopefully you enjoyed this journey. If you did, make sure leave those questions, or I should say send those questions, and leave those reviews so other folks can continue to discover this fun program. Let's go back around the horn. Tom, we'll start with you. You guys have been pretty busy. You had the crypto deal, you got the MJX deal now, the equity deal. What the heck else is cooking in the land of MIAX these days, Tom? His connection has renounced him yet again, so I'll make sure I put the plug in for him there. Listeners, head on out to MIAXoptions.com/spikes to make yourself heard. You want all that data? It's all there. You want the press releases? You want to hear about MJX and when the future's coming back? It's all there. Also, links to a pretty cool show called Volatility Views. All can be found MIAXoptions.com/spikes. And Mr. Rock Lobster, same question for you, sir. If folks are intrigued, they want to ask questions about any of the topics we touched on today in the vol space, where should they go? What should they do, sir?
I think optionpit.com to our Vol Edge or Vol Trading Club, so you can see how to trade these vol product things. We're having some good years in the products. Plus, you get to learn how to use them in different ways. Hedge a portfolio, put on hedge trades, understand how to use them against SPY, use the vol products against SPY to kind of hedge a basket of options or a basket of stocks if you want. So all kinds of ways to learn how to use the vol products in an efficient way. So come on over to optionpit.com and get your learning on.
Get on over to optionpit.com. Get your learning on. I do think we have him back. Tom, if anything you want to add here now, have at it, sir. The floor is yours. What's cooking in the land of MIAX, sir?
Nothing more cooking, but I was wanted to say I had some lobster last night at my friend's restaurant in honor of the working with the lobster boss today. So it's quite good.
There we go. So he ate you in effigy over the week. That's what he wanted to tell you there, man. He wanted.
And I heard you give the information, so thank you.
He wanted to get the early revenge on you scumbagging him to the downside there in our crystal ball. Well, a lot to unpack. OptionPit.com for all the vol education. MIAXoptions.com/spikes for all the information you want on all things spikes. And, of course, theoptionsinsider.com is the place to go in between episodes of this program. On behalf of Andrew and Tom and myself, thank all of you for downloading, streaming, subscribing, listening live. And we'll see you back next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.